Hey everybody, Dante here from Opus, and we are here with another installment of Dante's Information Download, the Master Builder series. And I'm very excited today to have a new guest, Bill Airy. He is the president of Lendio franchise here in Denver. And for those of you who are not familiar with Lendio, it's a really great marketplace and platform for small businesses, right? So I would say it's one of the leading marketplaces for small business loans in the United States. It's dedicated to empowering entrepreneurs by simplifying the process and securing capital. And you know how hard it is sometimes to secure capital as a small business owner, right? It can be very complex, it can be confusing, and Lendio really simplifies that process, right? And so I've got a couple of bullet points here that I want to go over before we really jump into it, right? To help everybody understand what Lendio is and what Lendio does, right? And so what they do, right, is they give you access to multiple lenders. Lendio works with over 75 lenders, giving you access to a variety of different capitals, right? It could include, and Bill will add more to this or correct me if I misspeak, but SBA loans, short-term loans, equipment financing, lines of credit, merchant merchant cash advances. They have an extensive network that ensures that they find the right solution for you, right? So when you look at going towards different types of funding mechanisms, if you go to a traditional bank, they might only have certain models, right? And you have to kind of follow what those models look like. With Lendio, it gives you kind of an open platform to see all kinds of different options, right? Another thing that I really like about Lendio is they have a simple and fast application process, right? So you don't have to go through the tedious work. And it gives you options, right? Because they have 75 different types of lenders, probably plus at this point. Um, they also give personalized guidance, right? So navigating the world of business financing can be overwhelming, but Lendio provides personalized support every step of the way. Their funding managers work closely with you to understand your business goals and the financial needs that you're going to have for your business. As I said, with the 75 lenders, they also provide flexible lending options, right? So whether you need short-term cash injection or you have unexpected expenses, right? Maybe you have some long-term goals that you need to do. Lendio has a solution for that. So they have loans ranging from maybe $1,000, maybe up to, I would say, probably 5 million. And they're trusted and proven, right? So trust is a huge thing when you're looking for capital. I'm sure, many of us have seen on, the Facebook groups for business owners, lots of people that are trying to give out loans or what they call as grants that really are a loan. And there's all kinds of ways that you can kind of give up more sensitive data that you shouldn't. Lendio is a trusted platform for that, right? And so they've facilitated, I believe, over $12 billion in loans total with more than 300,000 businesses across the country. So very large organization, very, streamlined and very simple to work with, right? And they have a commitment to transparency, which is huge. So they're committed to transparency and integrity. They provide clear, straightforward information about loan terms, fees, interest rates, all that thing. So you really know what you're going to get as a business owner, which is huge. So the reason why I wanted to bring Bill and the platform forward for today's Master Builder series is so you have another option that you can look at when it comes to funding, right? How to get funding, what are some of the best practices, kind of talk about the platform a little bit more. And that way you have a full encompassing view of what it's going to take to be as business owner to get to that next level that you need. So I'm going to take a step back, have Bill introduce himself, and then we'll kind of kick off a dialogue here and talk a little bit about business funding and financing.
Hey guys, my name is Bill Airy. I'm the president of Lendio Denver, as opposed to Lendio.com, which is a huge nationwide corporation. Lendio Denver is the local franchise, and my job is to be your advocate within the Lendio marketplace. So as Dante was saying, Lendio is not a lender. Lendio, we don't loan out our own money. We are the largest marketplace of small business lenders in the country. Uh, we have 75 different lenders offering 17 different types of loan products, everything from SBA loans to commercial real estate, revolving lines of credit, factoring, any kind of money pretty much that a business needs to borrow. Uh, we've got multiple underwriters in our marketplace, all competing against each other to give you their best offer in hopes of earning your business over their competition within that marketplace. So it really does democratize the business lending space. Without Lendio, you're left with basically Google searches, and hopefully your Google search returns an actual lender, and not just a lead generator, and that's going to blow up your phone and sell your data to 1,000 different boiler room, chop shop, sales programs that are just trying to get you into the most expensive product because they get paid a bigger commission. The design of the Lendio marketplace is kind of a waterfall design, where at the top of the waterfall you have the least expensive product that meets your needs. And so if you're looking for, let's say, for example, working capital, you're in a cash flow pinch and you just need some extra capital to get you through that short term. Then we would start in that segment of the marketplace, and the least expensive would be at the top, and typically that's going to be an SBA loan. We have SBA loans that start out at $150,000, go up to $5 million. And so we'll complete the application. Takes 15 minutes, has a soft pull on your credit with no effect on your credit score. And hopefully we get some approvals in that top level, where it's the least expensive, both in terms of your cost of capital, which is your interest rate and your fees, as well as in terms of cost to cash flow, which is how much money is coming out of the business's checking account on a monthly basis. The longer the period, the repayment period for that loan, the smaller those monthly payments are going to be. So we're always going to start off at that top of the waterfall. If we don't get any offers there, then the system automatically downloads us to the next level in the waterfall. It's going to be things like non-SBA term loans, uncollateralized term loans, non-bank term loans. And if we don't get anything there, then we waterfall down to the next level, which is typically going to be your revolving lines of credit, non-bank lines of credit, things like that. If we don't get anything there, then it falls down to the last level, which is going to be things like merchant cash advances, which is not a loan at all. It's actually a purchase of your future receivables, a percentage of your future sales. So the idea with the Lendio platform is that you get options where the SBA says 80% of small business loan applications done with traditional banks are declined. 80% of the applications in the Lendio marketplace, alternatively, are receiving offers, and these are legitimate offers that will give you an option to accept the loan or the funding that you need for your business. So my job is to be your advocate in that marketplace. I help take in your application, spruce it up, make it look as beautiful as possible. And then I submit that application into the marketplace in hopes of getting as many offers from as many underwriters as possible. I negotiate the terms of those deals, trying to drive down the cost and improve the repayment terms. And then when I'm done negotiating all those deals, then I bring them back to you, and you pick and choose whichever one's going to be the best for you and your business.
Yeah. So you touched on a couple of things that were really important to kind of reiterate, right? So part of it was the democratization of the process itself, right? And so when you're going through and searching as a business owner for different, types of financing vehicles, or maybe you go to the bank where, you do your business checking and savings, right? Things like that. You're getting really one option there, right? So you're not getting a full scope of what's available to you. And then, to Bill's point, is there's a lot of places out there that'll just sell your information to other companies, and then you'll get pounded incessantly on different products, right? And it can become very overwhelming and very confusing, right? Like you need to really have a true advocate for yourself when it comes to these things, right? Because as a business owner, you're already wearing enough hats as is, right? You don't need to overcomplicate the process here, and that's what they really do is streamline the success to the point that Bill mentioned 80% of their funding is actually going through in a meaningful way, right? Whereas on the flip side, the classic institutions are having the opposite effect, right? And I can speak to that firsthand, right? When I first started Opus, when I started my former business, Diversey, when I had, I used to run an auto body shop here in the Denver market for a number of years, right? The financing part of the business, right, to get through those cash flow, sticking points and to build onto the auto body shop, et cetera, right? Like we needed a bigger, better paint booth, right? Those things are very complex, right? And if you can't do it fast enough, it can really cripple your business, right? Or, really kind of slow things down when you're looking to get to a point to take it to that next level. So that's what I really love, about the platform itself. Bill, at a high level, right? We don't have to go into the super, gritty details, but can you tell us a little bit about the differences between SBA loans, maybe a line of credit, right? Like what those kind of look like?
Yeah, sure. So the important distinction to make between different types of credit is, well, take for example, if you start up your business, typically you're going to go in and open up a bank account at some point, and you're going to ask for some sort of a loan or a line of credit to help you with your startup funding. And of course, the bank is going to say, well, you don't qualify for that until you're 2 years old um, or older.
Mhm.
And so here's a credit card, here's a credit application for a credit card, and you can do cash advances against that credit card and pay them, 29.99% compound daily interest. Um, but the alternative is going to be a marketplace that has options for businesses that are younger than 2 years old. The Lendio marketplace goes all the way down to 6 months time in business. As long as the business has 6 months of history, depositing sales revenue of more than $10,000 a month into a business checking account, and the business owner has a credit score higher than 500, then chances are we're going to have some options for you. And some of those options may be a term loan, which is a set dollar amount and a set repayment period, um, as opposed to a revolving line of credit, which is going to have a set credit limit, kind of like a credit card, and you can take pieces of that or the whole amount and transfer that as cash into the business's checking account and then use that cash for any business purpose. Um, the nice thing about that line of credit is as you pay down that balance, you have that difference left available for you to use again in the future. So if you get approved for $100,000 credit limit on a line of credit and you only use $50,000, you're only paying interest on that $50,000, but you still have the other $50,000 left available for you to draw on in increments of as little as $1,000 at any point in the future. So the flexibility of a revolving line of credit is fantastic. That flexibility is a much higher risk product for any lender. So by nature, the higher the risk for the lender, the higher the cost for us, for the borrowers. So that is the drawback. And every type of money that we want to borrow as business owners is going to have pros and cons. And the pro with a line of credit is its flexibility. And you get to use the cash as opposed to a credit card where you have to go in and swipe, and it's not really cash friendly. A term loan has pros. Typically, that repayment period is stretched out for a longer period of time, so your monthly payments are cheaper. Also, it's a lower risk product for the lender, so the interest rates are typically going to be cheaper. The con with that is it is much harder to get approved for most of those term loans, and you're paying interest on the full amount of that loan. So if you get $100,000 term loan, but you're only putting $50,000 to use, and then the other 50,000 is just sitting in your checking account doing nothing, well, you're still paying interest on the full $100,000 if it's a term loan product. So it really is important as business owners for us to anticipate our needs. How much money do we need? If I only needed $50,000 and I got approved for a $100,000 term loan, well, then we should only take $50,000 because that's going to reduce the amount of money that we pay in interest and fees.
Yeah, I mean that's a really good point, right? And so that was going to lead me to my next question is, how can business owners determine the right amount of funding that they need when seeking loans and financing?
Is ask the question one more time. How many?
How can a business owner determine the right amount of capital that they need, right?
Well, obviously you're kind of looking into a crystal ball. I'm a business owner. I have been my whole career. Lendio is the seventh out of nine businesses that I've launched in my career. Brought several of them to profitability and successful exits. And a lot of what we do as business owners is looking into the crystal ball
Mm,
and saying, okay, what's my goal? What am I trying to accomplish? If I'm an auto body shop, is my goal just to make this business as successful and profitable as possible and then run it until I don't want to work anymore, until I want to retire? Or do I want to open up multiple locations throughout my local market? Or do I want to open up multiple locations throughout the country? What is your goal? What are you trying to accomplish? Now, if your goal is simply to run your body shop at a single location, but you need a new paint booth, well, you figure out, okay, how much is that paint booth going to cost for me? Well, it's going to cost me $75,000. All right. Well, now we have that. Now, do we have to hire any people, any additional staff to run that paint booth? If so, we have to factor in those costs. And maybe for the first 3 months of their employment, we're not going to see any additional revenue coming in off of that employee. So, if it's going to cost us $100,000 a year to hire a qualified paint technician, then we know we're going to have to cover 3 months of their salary out of the business's revenue or the proceeds from a loan. So $100,000 a year, you're roughly looking at $8,000 a month times 3 months. That's $25,000, closer to 28,000 if you count in your payroll taxes.
mhm.
So let's just call it $30,000. So your paint booth costs you $75,000. Your new employee costs you $30,000. You need a loan, net proceeds, money that goes into the bank account of at least $105,000 in order to accomplish the goal of opening up a new paint booth in your body shop. And so that's typically how most people will determine how much money they need. And I take it upon myself to help guide you through that exact process. Figure
Yeah, that
out what are our goals, what are our needs, and how much is it going to cost, and therefore, how much money do we need to borrow?
right. And I mean, that's really good, right? To have an advocate, someone like yourself to, help make the educated decision, right? Like, because as a business owner, an example that you gave earlier is like you get approved for 100,000, like, a lot of people be like, well, I'll take it, right? And not really considering, well, I really only need the 50,000, right? And you're just like, well, if they'll give me 100, I'll take the whole 100, right? Might as well,
Right.
double that. But it might not be the best decision, right? It could be, depending on that crystal ball concept, right? It's like, okay, here's the immediate need, and then here's a larger need, right? Or I look at things in tranches when I talk to other business, owners that are looking to secure different financing, right, through like private equity or venture capital, right? It's like we need to really build out a plan that's built in tranches. If you're offered, 15 to $100,000, what are you going to do with that money? 100,000 to a million to 5 million, right? We really have to build out a plan because there's, different, obstacles. There's different things that you can do with different sets of the money, but you have to have the right people in place. You have to have the right structures in place to be able to execute on that in a timely manner and to make sure that you're optimizing that cash usage, right? Because
Right.
the time's ticking, right? As soon as it comes on, the interest starts to incur, all those things, right?
Mhm.
And so, what do you say about personal credit, right? As far as it comes to looking at business financing, how important is personal credit into that equation? And maybe it depends on what stage you're in too, right? Like I've always been told, in the first 2 years of business, your personal credit's going to be looked at, your personal cash flow, when you're looking at most, lending vehicles, and then after that 2 year mark, it really becomes like the ownership of the business. Is that true? Can you tell me a little bit about personal versus business credit and what that looks like?
Yeah. So your personal credit is an indication on how um, how likely you are to follow the guidelines of a credit agreement that you sign with a lender. It's a predictor. That's all it is. It's a prediction tool that lenders use to try to predict your future behavior. And as business owners, typically we're going to run our business similar to the way we run our personal lives. And our personal lives are represented by that 3-digit number on a financial basis using that 3-digit number. How likely am I to repay that money? The higher the credit score, the higher the likelihood. And so for that reason, lenders and underwriters do rely fairly heavily on your personal credit score to determine whether or not you qualify for one of their loans. The business credit score, it takes a long time to get built up. And so and I've heard of a lot of companies out there that'll help you build a business credit score. I've never really come across any that are effective. Um, and for that reason, I just rely on, do things the way you need to do it. Run your business, and organically, naturally over time, you'll end up building up that business credit score. Now, that being said, I also have not seen many situations where a business credit score was the determining factor on a loan. It's more of a reference tool than it is a variable, required variable. Where I do see business credit come into play is if there's negative items. So if you have slow pays or late pays or no pays or collections or legal issues that appear on your business's credit report, that's going to have a negative impact on your credit worthiness, as well as the business's viability and securing borrowed money. So think of it as a filter.
Mhm.
Your personal and business credit is a filter for underwriters. It's an easy way for them to say, okay, we are only going to take applicants or give money to applicants with a 700 credit score or higher. And anybody below that is automatically declined. Doesn't matter. That filters out a huge segment of the application population and makes them more efficient as underwriters. Because so many traditional banks use that as a filter, that leaves a huge marketplace of business owners who need the money, need to borrow money, but don't have access to it.
Mhm.
And that's why the Lendio marketplace is what it is. It's very competitive for these underwriters, so they stretch to earn the business. Plus, with Lendio's system, it's very tech oriented. So it standardizes the application for just about every business owner out there, making it very easy and efficient for underwriters at these lending institutions and funding companies to determine whether or not you qualify. And then the third piece is it's such a huge marketplace. The Lendio marketplace has so many different funding companies and lenders, and every single one of them has a different underwriting box. Some of them care about your personal credit score, others don't. They'll check it, but that's usually for just fraud verification to make sure you're a legitimate person, or you're not. They do have to make sure that you are a U.S. citizen, for example, or you are legally allowed to work in the United States. And so that they may care about more about that than they do about your credit score.
Yeah.
Most of them don't care about your business credit score at all. So that's kind of the distinction between personal credit and business credit.
Okay. Yeah. No, thanks for providing that example, right? It's always a little bit confusing for people, especially as they start out. I mean, you said you've done 9 businesses, so is this at this point like we would consider you an expert, right? Like you've been through the trenches, as best of an expert as you can be, right? Like
Right.
every day in entrepreneurship and business ownership is a little bit different than the last. There's some standardization, right? There's some similarities that happen there, but I always tell people, they're like, wow, it must be so great opening your own business. You must have so much free time. I'm like, it's actually quite the opposite. I've never been more busy in my life. There's never been more gray in my beard, and my hair's not receded as far back as it has, in the last, 3 years of running Opus, right? So there's definitely a lot to take after there. So tell me a little bit about the documentation and the application process that you need to be to look for funding on the Lendio process. I know it's very simple, right? It takes, I don't know, maybe 10 minutes to fill out the form. But yeah, tell us a little bit about that process and maybe any documentation that people need to be ready with as they move forward.
Just getting started is so easy. We have to have the application, and it's really critical that everybody understands the distinct difference between Lendio.com and LendioDenver.com. My company is Denver.com. So you go
Hmm.
to LendioDenver.com. If you go to Lendio.com, you're going to end up in a corporate call center either in Utah or New York, as opposed to my local franchise office. So the application is critical at lendiodenver.com. During the process of that application, yeah, it does take about 10 or 15 minutes. It's going to do a soft pull on your credit, has no effect on your credit score. And as far as documentation is concerned, we need 3 months of business bank statements, a copy of your driver's license, and a copy of your voided bank check. That's the bare minimum that we need in order to secure funding. Now, if we're going for something like a commercial real estate loan or an SBA loan, obviously the documentation is going to get much more in depth. And again, that's my job, is to guide you through that process and make it as simple and easy as possible.
Very cool. Yeah, and I'll drop the link below if you're watching this in one of the Facebook groups, it'll be below in the comments. If you're watching this on YouTube, it'll also be in the description of the video, so you can easily get to that application wherever you find this information session. We'll provide that for you to make sure that you get to the right spot. That way you don't have to overthink it. Um, Tell me, can you give us any case studies or like examples of funding that you've provided for different business owners? Like want to have that feel good moment, right? Someone that was looking for a particular type of financing, they had been rejected several times, and then they landed at your doorstep, and you were able to get them to that next level of their business ownership.
Sure. So my business thrives on referrals, and my biggest referral source are small business bankers and commercial loan officers. Um, they are at the critical moment where um, a business has applied for a loan and got declined, and so they want business owners need options, and their banker wants to give them options, and Lendio Denver gives them a resource to refer them to, and not just a single lender, but 75 different lenders all in one fell swoop. It makes it very easy for us, for business owners, to secure the best financing that the marketplace can qualify them for. Limited, of course, based on the application. Things like time in business, your credit score, your financials, your industry, those types of variables are going to determine what we qualify for. So that really kind of sums up the benefits of um, being in a marketplace scenario instead of subjected to one or two different options, if that makes sense.
That does, yep, totally makes sense to me. One question that did pop up, I talked to business owners before doing a session like this, right, to kind of get a gauge on things that people might be interested in, or right, like questions that they might have. And one, question that pops up is, are there specific funding vehicles for different types of businesses? And what I mean by that is maybe if they're minority or woman owned, or maybe if they're, an environmentally focused business, or, a restaurant and things like that. I know in the grant space, there's set asides for different specific. I saw one recently for like a hair salon, right? Like if you were a business that did anything with like barber or salon services, things like that, there was a set aside grant for that. But in the lending space, is there special set asides for anything like that?
No, no. You're absolutely right. You'll see that in the grant space, because grant money is free money, and the institutions or people that are giving out that grant money want it to be earmarked for a certain subsect of the of the industry, and or sorry, of the marketplace,
Mm-hmm.
and they may pick specific industries in order to do that, or specific demographics that they're trying to target. And so you'll see that in most of the grant space. Now, you will also have nonprofit lenders that are focused on driving loans to certain demographics as well. Those tend to be institutions that I refer clients to if they
Hmm.
don't qualify for items or products within the Lendio marketplace, because oftentimes they can be on the more expensive side. So I'm always gonna leave that as like a safety net, last shot, last ditch effort type of situation.
Hmm.
Um, but yeah, you're gonna see that in the grant space, not really in the lending space.
Got it. Got it. When applying for something through Lendio Denver, right? What would you say is the average time frame of, application to approval?
24 hours.
24 hours. That's quick, right? Because sometimes when these things come up, you need a quick solution, right?
Yeah.
Or you need at least a quick, way of guiding yourself, right, to what could be an option to help yourself out through a cash flow issue. I know when I ran the auto body shop, cash flow was a big thing. We started the business with no credit, right? And we were doing everything that came in, we paid in the moment, right? So cash flow was really important for us, right? We would we're getting paid by insurance companies. So sometimes we'll get a portion of the funds up front when they do their initial, estimate, and then the rest of it doesn't come back until we do what's called a supplement, right? We had to tally up all the extra stuff that, came across from, the impact, and sometimes that could take weeks, right? And so it would put us in weird spots. We'd have to strategically schedule certain customers in the body shop so we can get quick cash, right? Like bumper fix. So we didn't need to order parts. It was just labor and paint versus, sectioning off a quarter panel, right? We needed to order this $10,000 quarter panel from Mercedes Benz, and, we didn't have the cash flow for it, right? So we had to really carefully schedule things and stack things so we could do it and make payroll and, the water and the lights and all that stuff, right? So, getting a 24-hour approval can mean, a huge difference for people, at least, like I said, in a guiding instance of, okay, this is what I can look at and to do. Now from that, right, once you get your approval, how long do you typically see, and I'm sure it depends on what kind of funding, do you see from that approval to getting the actual funding?
Yeah, it varies wildly based on what kind of a loan we're going for.
Hmm.
For example, as I mentioned earlier, the pro with an SBA loan is it's going to be the cheapest cost of capital in terms of fees and interest, but it's also going to be the cheapest in terms of cost to cash flow because an SBA working capital loan is 10 years. It's spread out over 10 years. Um, the con with an SBA working capital loan is that it requires a lot of documentation. And obviously, that documentation takes time to review and underwrite. And so uh, it's going to take a while to get funded. And it's 6 to 8 weeks to get funding for an SBA working capital loan. 4 to 8 weeks, depending upon how quickly you are at getting the documents that are required throughout the process.
Hmm.
Um, as opposed to most of the other products within our marketplace, the time frame for funding is within 48, 72 hours,
That's good.
a couple of days.
That's good. Yeah, I mean, it is really important to differentiate, right, or to really kind of explain, right? And I talk about that with different business solutions that we do here at Opus, being in the technology space. Is, people ask, well, how long is it going to take for us to set up this, we'll say, a phone system, right? And it's
Mhm.
really dependent upon how quickly you can get us the information too, right? We can go as fast as you're able to go, right? There's going to be parts of the process that you're going to have to collaborate with us. We're going to need different parts of information. So, it's really important to have all your ducks in the row, right? Have, your bank statements ready, have your cash flow statements ready, have your profit and loss statements, your balance sheets, all that stuff. Like, have your books up to date, right? You should have that as a business owner. But I know as well as there's always something to be done, and sometimes things get pushed off, and typically it's the things that are the least fun, which is that part of it, right?
Yeah,
You have a temperature gauge of what's happening in your business, right? But a lender's not gonna, go off of your feeling, right? They need to see the hard facts. So it's always important to have that really buttoned up, I think, before, really moving forward in the process. And that way it streamlines your success, right? And you become less, frustrated, yourself as a business owner when going after, different type of funding mechanisms. Um, Let me ask you this. So post funding, right? Uh, what kind of support and resources does Lendio of Denver offer with post financing?
Well, my role is not just to be your advocate in the Lendio marketplace, but to be your coach, to be your resource, your guide. I really take my position very, very seriously. So post funding, I'm going to be there for you. If you just need to bounce ideas off of somebody that you know and trust that has experience running his own business, then that's me. So
Mhm.
a lot of my time throughout every day is just talking with my clients about their businesses and strategizing, brainstorming different options. So because this is not going to be the only time that you're going to need to borrow money as a business owner. You typically go through a progression, a series of different types of loans, different types of funding products. And as you grow and become bigger and bigger and more successful, you're going to need money to fund that success because it takes money to make money. And if you
Mhm.
don't have a shoebox full of cash or a rich uncle, then you're going to have to borrow it from somebody, and that's where we come in. So yeah, that that's typically the way I'd look at it. The other thing to consider too is that on the other end of that fulcrum, on this side you have the lending side or the borrowing side. On the other side is the equity side. That's where you can sell pieces of your business, ownership in your business to investors.
Mhm.
And I want to make a clear separation between those two because I have nothing to do with the equity side. My focus is on the lending side. And for me as a business owner, I've never ever brought on investors any of my businesses because I don't want to share in the rewards of my work.
Right.
And it's also I think the most expensive type of fund source is going to be an equity investor because as opposed to a loan, which ends at a very distinct point in time and has a very specific amount of cost, equity investors, you're going to be paying them their percentage of your profit forever.
For the
So,
lifetime unless there's a clause to get out, right? And that's
right.
very complex, it's and those are complex solutions, right? We do advise on that, right? And we connect people to those type of private equity and angel investors and venture capital funds, right? And everybody thinks it's you know, like a movie. You're just gonna meet
Yeah.
the investor and they're gonna give you some cash, or they think it's like Shark Tank, and the reality is it's not like that, right? Like
No.
sometimes, a lot of times doing the traditional financing is honestly the easiest, and like you said, almost sometimes the better way to do it because there's a finite. You borrow this much, you pay it back, you're good, you're done, right? You move on with
Hmm.
your life. You get another loan later when you need to experience another section of growth. You good, you move on, etc. Right? So, um, those other partnerships are lifetime, right?
Yeah,
And
exactly.
they can get sticky. So, um, well, that's all the questions that I had today. Is there anything else that you'd like to add, or anything else that you'd like to kind of chat about as far as the platform and the services concerned?
Not at all. Other than the way to start the process is lendiodenver.com. Start there, do your application. At the end of the application, it will give you my phone number. It goes direct to me and give me a call. And then we'll go to the next step in the process.
Oh, I do actually have one question, right? And this is probably more of a personal opinion, right? How
Okay.
often do you think a business owner should look at their funding options, right? I say maybe every 6 months or so, reevaluate where you're at as a business and just check it, right? If it's a soft credit check and it's not going to affect you, but you want to kind of get a temperature gauge because sometimes you don't know where these things are going to come out of nowhere. You might get a big contract you don't have the production lines for. You might have like a weird cash flow where a customer leaves and you have to get through a storm, things like that. So I always tell people, you should probably look maybe every 4 to 6 months just to see where you're at and to see
Mhm.
what's available to you. What's your opinion on that?
You know, I can understand some people wanting to get those temperature checks. I would say that it can be counterproductive.
Okay.
And here's why. I always focus my businesses on making more money and profit. I do have it in the back of my mind, how much money am I going to need, and do I have enough cash on hand to do it? And if not, how likely am I to qualify for a loan or line of credit? Um, and so for that reason, and also because you don't know, you can't predict everything. That's what a line of credit is for. That particular product is a great product because you don't pay any interest on that money unless you borrow that money. And it's a
Right.
very, very easy to move money from the line of credit into the business's checking account to use for whatever purpose you might need in the future. And and so for me, for each one of my businesses, I have multiple lines of credit, multiple revolving lines of credit for that reason. That way, I never really have to worry about a temperature check on whether or not I qualify for better financing. When I'm coming into a situation where I am anticipating the need to borrow money, then I immediately start that process because the
Mhm.
last thing I want to do is wait until the very last minute, which reduces the amount of options that I'm going to have available to me. So as soon as you anticipate the potential need for funding, um, that's when you apply.
That's a
Um,
good time.
that's the way I look at it.
Okay. Yeah, no, thank you for that. It's look, it's good to get clarification and a little bit of, guidance on that part of it too, right? Because as I said, I'm not an expert in this situation. I just know a lot of really great resources like Lendio Denver and other options for people and business funding and always like to educate people on it from the horse's mouth, right? And get some real true, feedback on the best practices for it. So we'll leave that today. Bill, I want to thank you for being a guest on the show. It means a lot to us. It means a lot to the viewers. I want to thank everybody who's out there watching. Right, I always try to end it very intentionally and say, "Hey, look, thank yourself for spending the time and opportunity to do this." There's a lot of different ways that you can spend your time in a day, and you've chosen to make yourself better, faster, stronger, smarter as a business owner by watching this presentation and learning a little bit more of the education process, right? And so nothing in life comes without hard work. I always say, manifestation without perspiration stays in your imagination. So go out there and get it. As business owners, don't be afraid to use the link. Like I said, I'll drop it in the chat. I'll drop it in the YouTube video and check the application out and see what you can qualify as a business owner and get out there and do it. Any parting words, Bill, for the audience?
No, just wish you guys all the best of luck in your ventures, each of you individually, and remember that nothing is more important in business ownership than perseverance. Never, ever, ever, ever give up.
That's the truth. That is the truth, and it's going to take a lot of that. Well, thank you everybody for joining us. Thank you once again, Bill. I always appreciate it, and everybody have a great day. This is once again Dante's Information Download, and this was a Master Builder series.